everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And this morning I was thinking about the swing traders in my audience. Really, a swing trader's career is all about trading those zigs and zags on a stock chart, looking for the highs and the lows. And so I wanted to talk about a trading system for a swing trader who only uses one technical study, and it's actually known as the zigzag high-low indicator. I think this is going to be an interesting discussion. This is a tool I haven't really visited in about, it's actually been a little bit more than a year. So I'm really looking forward to getting into the weeds with this. We're going to talk about how it's built, how it might be used for trade signals, planning and placing an example trade using it. So a lot to discuss. Before we can get to any of that, though, let me first of all say hello to everybody who's already chatting in out there in YouTube. Hello there, Doug and Jim, JDS, Josh, Dom, PR451, Chaplain Dave, Curtis, Robert, Will, on and on the list goes each time. So thanks for joining us each week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream is concluded, enjoy the recording. Those are a great way to watch these webcasts. But if you'd like to be here in the live stream, this is a Friday webcast series. We kick things off promptly at 1 o'clock Eastern time. All right, now, as a treat for my live attendees, my very good friend Kevin Horner is going to be hanging out in the chats. He's going to be addressing any questions that come in. He's keeping an eye on those chats. As those questions come in, if I can't get to them, Kevin's there to pick up my slack. I noticed that Kevin's already been actively chatting with the live stream attendees. Thanks, Kevin, for having my back. And Kevin, I would like to issue an invitation to you to follow us on social media. Kevin has already posted our handles there in the chats, but you can find Kevin on X at Kevin Horner CS. You can find me on X at Cameron May CS. And as of a month ago, you can also follow me on LinkedIn. So you just go to linkedin.com/in, throw on a /Cameron May CS, and that'll take you right to my profile. But let's get right into this discussion. Learning about and trading the zigzag high-low indicator. But of course, as we do this, we need to bear these important disclosures in mind. Trading certainly carries risk, so keep these risks top of mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. And investing involves risks, including the loss of principal. All right, so with that important stuff accomplished, let's set an agenda for today. First of all, this webcast, as it always is part of an ongoing series of discussions. So we already have some example paper money trades in play. So we're going to go have a look at those. We have two trades. I think one of them we're going to be wrapping up today. We'll talk about the logic of both. Then we're going to take a quick peek at the S&P 500 through our trend value momentum strategy set through that lens, just to see what the market conditions are at the moment. And then we're going to go to our new technical indicator. I would suspect the vast majority of you here, well, some of you may have heard of the zigzag high-low indicator. Possibly some are trading it. If you want to chat in, let me know. Are you familiar with this indicator? Just a quick yes or no. Don't have to tell me whether you're actually trading it actively or not. Just are you familiar with it? But what we'll do is we're going to add the indicator to it, an example chart. We'll talk about how it's built. It won't take us long to learn it. Then we're going to talk about how it might be used to generate buy and sell signals on a chart as sort of a standalone trade system. Again, for better or for worse, no indicator carries a guarantee of performance on any given trade. But then we're going to plan to place an example trade before we're done. So Kelly says, nope. You haven't heard of it? Will saying, no, sir. This a new one to you? All right. Well, let's go right to the Thinkorswim platform. Looks like a whole lot of no's out there. Did I see, Josh, did you say yes? You have it on there? Anyway, here are our two example trades right now. We have ATO, not doing terribly well. PLTR, doing just fine. ATO, we're going to wrap this one up. We own 28 shares. And there's a reason why we're wrapping it up. So this was a 3 green arrows trade. So we entered on 3 green arrows, and then we had a holiday, caused us to miss 3 reds. Well, let's look at what's going on right now. We have a fresh set of 3 red arrows. 1, 2, and this tilt in the stochastic coming up just shy of getting into the overbought zone and turning back down. Some would call this a phantom red arrow. Time to sell this one. Now, if you didn't catch the discussion originally, make sure that you do yourself a favor. First of all, subscribe to our Trader Talks channel on YouTube. You can just go down below the video right now, click on subscribe. It only takes a second to do that. It doesn't cost anything to do that. But this is where we house, well, you can join our live streams here, but you can also find our playlists of previous webcasts. So for example, if I go to playlists, I can just go about halfway down. There's my advanced charting techniques, and I can see the full playlist of previous webcasts, including, let's find it, building and trading the 3 green arrows method on a stock chart. Now, we're also going to be talking about the RSI trade that we took last week. So that's where you would see that discussion and the logic of that trade. But let's go back to our chart here. Yep, 3 red arrows. Time to wrap this one up. Let's go to our monitor tab, right click on that position, create a closing order, and let's just sell it. And in the interest of speed, I'm going to put this in as a market order. Obviously, as a market order is just saying, hey, we'll accept whatever we can get for these shares. We might not be thrilled with it, but we'll take it. Right now we're trading for 171.57. That's might not be what we get, but we're looking at about a $100 loss on these 28 shares. Losses are certainly a potential outcome when trading stocks, regardless of the technical approach. Let's sell these 28 shares. I'm going to click confirm and send. Selling the 28 ATO shares at the market price. No commission on this trade, but there can be on some types of trades. Let's send that order off and should be momentarily out. And while that's working, let's look at our Palantir trade. We own 33 shares. Okay, we're out at 171.60. Done. All right. But our Palantir trade, different set of technical tools that were used to plan and place this trade. We're in 33 shares. Let's go to our charts. Let's load up PLTR. This was last week's trade. And if we go up to our studies, let's load up our PLTR RSI. And it occurred to me, this is a moving average cloud. The way that it's typically abbreviated is MA cloud. That sounds vaguely Scottish, doesn't it? RSI and McLeod. It means moving average cloud. Anyway, the logic for this trade was an RSI that had dipped down below 35 and started to rise. We also had our moving average cloud still green. It's dipped red right now. Now that's not our exit signal though. RSI is climbing. The plan here was to sell at previous highs up at 188 or take our losses with a stop down at 140. If our stop were triggered, we may sell at 140, maybe less, maybe more, but that's where our trigger point would be. So this one, it's doing just fine. It's really close. And for some traders, when they get this close, let me ask you, how many of you ever consider doing this? We're getting close to our target. Have you ever seen it get close and then fail, and then all of these profits turn into not as many profits, and then maybe all the way back to losses? For some traders, if they're getting close, maybe they start to scale down that position. So if we have 33 shares, maybe we sell 16, 17, 18 shares. I'm not going to do that today, but I just want to throw that out as a possibility. We're going to stick with the original plan. That one's doing just fine. So with that said, those are our current positions. Let's add a new one. But before we do that, we want to get some context with what's going on with stocks in general. Look at this. We are really close. Are we going to get there? We could, still 3 hours of trading left in the trading session, close with our strongest close of all time. I don't know if we're going to get there or not, but we're awfully close. So market conditions have been, and right up to this moment, seem to continue to be quite bullish. And really, for the study set that we use for this webcast series, they're all three sort of just confirming that. You can see that our 50-period triangular moving average is still trending above the 100 as it has done since June. The RSI continues to strengthen. So trend, check for bulls. RSI rising, check for bulls. That's our value indicator. And then our momentum indicator down here, the MACD, was showing selling momentum. It has strengthened into buying momentum. At least that's the typical interpretation of green histogram bars on this oscillator. And they just continue to climb in size. So That's just sort of check, check, check for bullishness. So all of that said, does that guarantee the next time we meet next week that the stocks are certainly going to be higher than they are right now? Nope. But for right now, let's just say that our trader is still bullish. So we're going to continue planning and placing bullish trades until we change that outlook. But I wanted to put myself in the shoes of a swing trader who's really trying to catch the zigs and the zags. You ever feel like you zagged when you should have zigged, and you zigged when you should have zagged? Bought at the low, bought at the high, sold at the low. Well, here's an indicator. Obviously, through its naming convention, I think the author was attempting to address those sorts of issues with timing. So let's load up an example stock. I'm going to bring up AMD as our first stock example today. And let's load up, first of all, we'll just clear off the studies that we have on here. Remove the TVM, Trend Value Momentum study set or strategy set. And I'm going to load up the zigzag. So let's type in zig. That'll get us down to just those with zigzag in the title. Now notice there are 5 different indicators that are of a similar nature, but not exactly the same. So if you want to follow along, the one that we're using today is zigzag high-low. There you go. John says McLeod was the name of the clan in the Highlander movies. Been a long time. I think I saw the Highlander back in the 80s. Yep. Or just Highlander. I think it's not the Highlander, just Highlander, right? Yeah, so let's add that to our chart. What was it? Now you got me thinking. What was his first name? Anyway, yeah, Sean Connery in that one. Anyway, let's as we go to apply this, I want you to notice a few things here. There are actually 5 elements or characteristics in the construction of the zigzag high-low, very insightful into the logic that went into its creation, and also might help interpret how trade signals might be generated. So high, low, 5.0, 5 without the 0.0, and then 1.5. Duncan McLeod. There we go. I thought there was a Gavin McLeod too. Dave says, wow, you're old. I know. I got the evidence right here. Anyway, let me click apply here and click OK. But what we're left with when we apply the zigzag high-low, not only is it a good name, it actually fits its appearance. So let's talk about how this is built. And I said that there were these 5 elements. Let's just outline them over here. Make them nice and bold so everybody can see them a little bit better. We have the high, the low, we have 5.0. We have, I put a 5 in there. It's because I'm thinking and typing at the same time and talking. Dangerous combination. We have just plain old 5, and then we have 1.5. So let's talk about these different elements. So obviously, first thing, let's hit those priorities. Highs and lows. So this chart does, you'll see that the line reverses when the stock hits either highs or lows. And man, that thing is magical. Look at, now I can say that a little bit tongue-in-cheek. It's not magical. Anyway, but yes, what it's trying to do is identify highs and lows on a chart that are separated by a specific amount as a minimum. So it's not just, ooh, we went up for an hour and then we hit a high and we reversed and it came down for a day and we hit a low and back and forth like that. Instead, what this is looking for are swings in stock price that are potentially substantial enough that if a trader's timing is good, maybe there's potential for opportunity there. So little quick ones might be too fast unless we're really quick to potentially benefit from. So let's talk about highs and lows are identified. Well, if we look at each one of these, how about we just zoom in on the most recent ones? So there's some high there, there's a high there, here's a low here, and we're working on a new low. Anyway, a high is simply a candle that sticks its candle wick up higher than the day before on a daily chart. On an hourly chart, these would be hours, but it looks for a high on a daily chart that exceeds the high from before and the high from the day after. So that's the very straightforward definition of a high here. So yes, this is drawn, it lags by 1 day. That's just necessary for the identification of these highs in this way. That's very common. And as a matter of fact, on the topic of lagging versus leading indicators, sorry, let me throw out just a quick opinion, take it for what it's worth. But in my observation, technical indicators are all lagging. In economic models, if we're looking at, maybe more homes are being built, or maybe more home permits are being issued, and therefore maybe more houses are going to be built. That makes sense. One leads the other, but in technical analysis, leading versus lagging, in my view, seems to be more of a marketing ploy than anything, because essentially all technical indicators are built on historical information, price and volume, things that have already happened. If somebody can show me an indicator that knows tomorrow's price or has seen next week's volume, I'd love to see it. But in any case, let's get back to this. But that's the identification of a high. A low is just the opposite. We're looking for a candle that has stuck its tail down further than the day before or the day after. Pretty straightforward. But those can happen in pretty rapid sequence, leading to what we call whipsaw events, not really offering a lot of value to a trader, even if they're quick. So the next element of this indicator is that they have to be separated by at least 5% from this high to that low, or from that low to that high. So you will see times where, hey, wait a minute, didn't this candle right here was lower than the previous day, it was lower than the next day. Why did it not reverse course right there? Because it didn't move 5% yet. So that's an important element of this tool. Now, a fourth element is 5. So this is 5. Let's throw this on here. 5%. This one is actually 5 days. And this one, just as a quick spoiler alert, is an ATR. Let's throw a little X here. 1.5x ATR. So a 5% move on one stock may be a substantial move. On another stock, it might be an everyday occurrence. Just from one stock to the next, there are differences in volatility. And so this indicator attempts to adapt for that. 5% is always the minimum, but if we have a stock that is more volatile than let's say, an average stock, that minimum will increase to at least 1.5% of a 5-day average true range. Now, if you're not familiar with average true range, you might want to go look a video on it. But basically, it looks at how much does any given stock move over a 24-hour period. In this case, over an average 24-hour period over the last 5 days. And did we get at least 1.5 times that size of a move between our high and our low, or between our low and our high? That's it. So it's an attempt to adapt the indicator to more volatile stocks. There we go. So that's the construction. And I think that'll be serviceable for how it's built. So now let's talk about how it might be used. And let's see, am I missing anything? How effective do you think this indicator would be in writing a scanner to look for wave 3 setups for the Elliott wave theory, using it alongside the Elliott oscillator? Elliott wave theory, just to very quickly address that question, does look at advances and retracements on a chart, but it tends to be much longer time. So I don't know that these two would mesh very well at all. This is actually built for very quick zigzags. Elliott wave usually plays itself out over the course of at least months, possibly into years. Now, some traders will impose that same Elliott wave logic onto shorter term time frames, and maybe then we could kind of knit these two together. But at least, and I've never compared them, side by side. I've never attempted this before, so I'm just going off of initial impressions. But to me, it's not an entirely good match. Great question though, because there are some obvious, at least surface similarities between using this and using an Elliott wave. All right. Chaplain Dave, that's a common criticism of Elliott Wave. You say it's too subjective. Yeah, that's true with a lot. Now, too, that's also kind of a squishy term. But yeah, a common objection to a lot of technical approaches is there is subjectivity. And the way one trader sees a chart might be entirely different than another trader, and they might both have the same level of expertise and practice. Anyway, let's go back to our zigzag high-low and talk about how to identify entry signals and a couple of cautions too as I go. Now, zigzag high-low can actually conceptually be used for planning bullish or bearish trades. We're going to be using it for bullish trades for this example. Given today's market conditions, we've put ourselves in the shoes of a hypothetical investor who sees things as still being bullish. But how about we just look at things bearishly? So with a zigzag high-low, a common approach, and this is the way that its author intended, is to look at the highs and the lows and see which direction they're heading. That sounds like just plain old, don't we do this all the time in technical analysis? Look for highs and lows. That's true, but most commonly in technical analysis, we'll look for a combination of a higher high paired with a higher low to identify trend. With a zigzag high-low indicator, we don't quite wait that long. It doesn't allow for quite that much patience. Instead, as a bearish signal, what the trader is looking for is just a lower high. That's all. And actually, the entry is taken bearishly when that lower high happens. Now, this is not left to interpretation. We either have the lower high, as a matter of fact, what do we have right now? Here's a high, there's a high, there's a signal that might have been taken right here. What do we have right now? The indicator is going down on AMD. So yes, a zigzag high-low trader may see this as an absolutely authentic downward or bearish trade signal. Is that a guarantee that AMD is going to definitely go downward? No. But that's a common entry. So when might we take the exit if we're taking a bearish entry on that? Well, the trader waits for another reversal in the other direction. So in this case, since we're coming off of a high and moving toward a low, when a new low is achieved, as soon as we get that first uptick, the little green line tilts upward, trade's done, it's over, right? Now, how do you suppose, if that's how we trade this bearishly, and we don't need this anymore, so I'm just going to hide the left column, it isn't really necessary for the rest of the discussion. What do you think the trader is looking for a bullish entry? Well, if lower highs were the entry for a bear, it's actually the opposite, higher lows for a bull. So as an example, back here, first part of April, we hit an initial low. It was just the next in a series of lower lows on AMD. We raced up to a new high. This had already advanced at least 5%. We hit a high. There's that candle with its head sticking up higher than the one before and the one after at least a 5% move. And we start to head down again. Well, now we come down to a low. As soon as we have that first higher low, there's the entry. So in this case, the entry might have been right somewhere, probably that red candle right there. Because we have to wait a full day just to see if that day's low is higher than the one before. We get that confirmation, entry on the open of the next day. There's the entry in this signal. So higher low, enter on the first little upturn on that second low. Now, Chuck says, but you get different higher highs and lows and lower lows as you go. Chuck, I think what you're talking about is a little revisionist history that this little dirty tool plays on us. Yeah, I want to talk about that. Anyway, but yes, the concept here is now we just wait for the stock to hit a new high. And when that turns down, that becomes that bullish trader's exit. So that's the idea. Now, I think what Chuck is talking about here is when I look at this, if I were to look at this chart, I might think, this thing never misses. Even on this higher low right here, it still turned down in time to give us a profitable exit, even on a very small swing. And let's see, did we get a lower high here? We never got a lower high, so there wasn't a bearish entry. Here's another entry right here. That one still would have been profitable. Oh, this thing is amazing. Well, one thing that I think this is what you're hinting at, Chuck, but this is reality with this indicator, is that it does update itself after the fact. Here's what I'm talking about. Let's say that we took an entry, maybe on this entry right here, right? So we had, actually, it wouldn't have been an entry. That's a false entry. It's not a good example. How about this one back here? I'll bet I can find an example here. Yup, there absolutely is an example. There are a couple of examples here. From this entry, let me use my drawing tool, and let's see how far we have to move before we go up 5%. Let's assume we got in on that red candle, and we start moving up. Look how quickly AMD accomplishes 5%. So it goes up and up and up, and let's just use this one right here. How far had we moved on this move, going from 114 bucks to 148 bucks, way beyond 5%? Well, if I zoom in on that, isn't this candle high higher than the day before and also higher than the day after? It absolutely is. So shouldn't we have gotten a downturn in the indicator right there telling the trader to exit? So we're looking at this thinking it allowed us to ride all the way up to here, but there was definitely an exit signal right there. And the fact is, in real time, as this trader was watching for an exit signal, it would have been there. And if they're trading according to these rules, trade is over right here, if not sometime before, because we'd moved at least 5% and then we got that downturn. So why isn't it there now? Well, it's because on this pullback, the stock is now waiting for the chart to move down at least 5% so it can set a new low. It didn't go down 5%. Instead, it went down less than 5%, and it turned around and started going back up again. As soon as it started to do that, that's what I'm talking about. The indicator will say, whoops, that never happened, and it will erase the exit signal that it once provided and make it look like it never did that. So this is what I refer to as revisionist history built into this chart that makes it a little bit trickier. People will ask me, hey, Cameron, how good is this? Can you do some back testing on it? This one's a tougher one because it doesn't look now like it did at points along the way, right? But with that said, is there still potential value here? Possibly. Probably the best way to back test this indicator is to just get some paper trades going on it and trade them, see how they play out, rather than going back in history and just observing like this. If I just zoom out, I'll say, well, let's see. Boy, this one was a killer trade, and that one was a good trade, and that one was a killer trade, and that one was a good trade, and now we're in a bearish trade that also worked. Art Vandelay made the same observation someone else did. Looks similar to Elliott waves. It is. It's kind of like miniature Elliott waves, although it's not the same logic. We don't wait for, 5, 3, 5, 3, that kind of stuff. We don't go 1, 2, 3, 4, 5, and then ABC. No. Anyway, but I think what we've done here is we've done a pretty good job of explaining how this is built, how it might be used to generate entry signals, how it might be used to take profits if profits manifest themselves. But to go back to this revisionist history thing, some traders, to adapt for this, they use their stops very precisely. This indicator is built to only signal if we've moved at least 5% in the new direction. So in recognition of that, a trader quite commonly will use a 2.5% stop. If there's 5% potential before the signal to take profits, maybe we'll get out if we start to falter and instead the price has fallen by 2.5. All right, so that's sort of a plan for trading this indicator. So let's go look at some more examples. We have AMD. I went out, looked at some stocks today. Here's what I did this morning. Went to the watch list of the S&P 500, started right at the top, and just quickly scanned on down through like this, just clicking my down arrow and looking for recent entries. This one is an uptick, but it's actually a lower low. What we're seeing here is a lower high. This is more of a bearish exit than a bullish entry. Didn't have to go very far before I started to see some stocks that were giving entry signals. Now, let's see if any of these are holding on because they can change. Here's Eli Lilly, and this one did change. I was wondering about this. Let me zoom in on this. So we have a low. Whoops. Let me zoom back out just for a moment. Here's a low way back here. Here's some revisionist history happening because do you think we went up more than 5% to this high as we traveled from $625 up to $775? Absolutely. What about here? Yep. In any case, looking at more recent developments, we, as of a couple of hours ago, looked like we were working on getting that higher low because yesterday's low was still below today's low. Look at how close they are. Yesterday's low was $1,007.18. Today was $1,006.50. So what is that, 68-cent difference on a over $1,000 stock? Yeah, when I was looking at this just half an hour ago, it looked like there may be a signal. This is why some traders will wait till the end of the day to see if they get a confirmation and either trade right at the closing bell if it looks like, oh yeah, we're definitely going to close above the low or very, very likely, or they'll wait till the next morning. So Eli Lilly, not quite there. Let's look at McKesson. Is McKesson helping? Is McKesson hanging in there a little bit better? Yep. So here we have an upward move. We have a pullback, and we are working on what appears to be, actually, we do have a confirmation in this case, because this was our lowest day. Right there. That one actually confirmed yesterday, so we didn't have to wait for anything today. I'm going to go ahead and take a trade on this one. All right, so how do we place the trade? Where do we take our profits? Where do we take our losses? The stop we can enter right away. The target we have to wait to see how it plays out. So let's do this. Let's first of all save our studies. Let's save this study set as our MCK zigzag. Keep my cursor out of the way so you can see what I'm doing. High, low. So that we can find these studies again when we need them. We're going to make a plan here. Sell on bear zag. So we're going to say it zigged right here. We're going to sell if it zags. And just because I like it better, I'm going to change this to blue. And we're going to have our stop 2.5% below our entry price. So let's go to our monitor tab, or pardon me, our trade tab. Let's make sure that we're looking at McKesson. We need to, we can just link this to our chart so it automatically loads. And we're going to, let's right click on our ask price. I'm going to right click on this. I'm going to put in a custom buy order with a stop attached. So we're going to buy how many shares? This is an $810 stock. We typically try to keep our investment at under $5,000. So that's going to allow us to get what, about 7 shares? Let's see. How much can we fudge this? 5,000 divided by 810. Can't quite get 7. We can get 6. Kind of a pricier stock in the grand scheme of things. So we'll buy 6. We're going to put it in order to sell 6 under a specific set of circumstances. Again, in the interest of getting a quicker fill, we're going to try to get this filled while the camera's on. I'm going to put this in as a market order. In another webcast, we put in a limit order, didn't fill the trade. But where's our stop going to be? Well, if we're buying at 810, let's do some quick math here. Let's assume an entry of $810. Yep, might be some change, but 810, let's multiply that by 0.9, see if you follow me here, 75. What does multiplying a price by 0.975 do? Well, it effectively subtracts 2.5%. So that means we're going to have our stop in at 789.75. 2.5% below our entry, because we're looking for a possible 5% as a minimum reward. Now, we're already on our way a little bit to possibly hitting that. That's okay. So again, 789.75 is going to be our stop. And let's make that a good till canceled order. That's it. So with just this one indicator here, we're planning on placing a swing trade with a plan for when to take profits, a plan for when to take losses. We understand how the indicator is built. So let's click confirm and send. Going to buy 6 shares of McKesson at the market price. Going to sell those. If we happen to slide down to 789.75, we're about a 2.5% risk. Otherwise, we're going to let this run until we get a reversal, or we'll call it a zag. And let's send that order off. No commission on this trade, by the way, but there can be on some types. And we're in those shares. Guys, we've accomplished what I set out to do today. Yeah. Kelly O says, can you set alerts off the zag? I'd have to look, Kelly. I haven't done that specifically with this indicator. I'd have to see if it's among those where it's a possibility. In any case, we're going to keep an eye on it. And I don't take any trades when the camera is not on. You get to see the logic of the trade. So even if it zags, on, let's say, a Wednesday or Thursday, we'll talk about it on Friday before we take any action. But we're done with that, guys. We've learned the zigzag high-low indicator, how it's built, how it might be used to generate entry and exit signals, how we might plan or make a plan for a pretty complete stock trade using just that one indicator. Hope you enjoyed this discussion. This is what we do on Fridays. We acquaint ourselves with the tools and techniques that are available to stock traders on thinkorswim desktop charts. So I will look for you in next Friday's webcast, but of course, we have other educational resources that you need to be aware of. So let's quickly remind ourselves. Number one, if you are new and you haven't yet subscribed to our channel, I'd strongly suggest you do that now, because our YouTube channel, it's called Trader Talks Schwab Coaching Webcast. You can subscribe by clicking the button right down below the video. But this is where you can join our live streams. You can find our playlists, like the playlist that Kevin put in the link for the live attendees, or I showed you where to find the playlist for this webcast series right here. You can even do searches for previous discussions. So for example, if you want to look at the zigzag high-low indicator that I've already discussed, if you want to zig back to that, there it is. An example system for trading stocks with zigzag high-low indicator, if you just want a little repetition with this. I will tell you, it's going to be largely redundant. If you saw this one, repetition's nice, but I don't know how many revelations you're going to get from that one in particular. Anyway, another thing that I would suggest is that you follow your favorite presenters from Schwab on social media. You can find Kevin and me on X as an example. So you can find Kevin there at Kevin Horner CS. You can find me on X at Cameron May CS, and you can see I'm very active on X. Almost 6,300 posts. Wow, that's, yeah. I post on here just daily market developments or whatever. And if you reply to one of my posts, I try to reply right back to you. It allows for interaction that's not otherwise available when the cameras aren't on. Now, another thing that's pretty new is that you can also follow me on LinkedIn. You just go to linkedin.com/in and then throw on /, let me bring that up, /Cameron May CS. That'll take you right to my profile here. Give me a follow, but I also post here. Big advantage for me on this is I can get a lot more detailed in these posts. So for example, I posted about the issuance of new shares by SoFi Technologies, and propose some of the impacts that may affect shareholders. And what are my followers' thoughts? Are those impacts going to be longer term, just sort of short term? Is it more of a buying opportunity? How do we see it? And then we can have sort of a back and forth discussion there. So this is a great way to connect with your favorite presenters, is right there on social media. Give us a follow there. Everybody, thanks for all the thumbs up. That's definitely appreciated. 140 people watching the live discussion right now. And I can see as I refresh my screen, how many thumbs up do we have? 41. Thank you for that. That's like a pat on the back for your presenter. It also tells YouTube that you enjoyed this video and that maybe they ought to show it to other people. So it gives us a boost in the YouTube algorithm, helps more people learn about stuff like the zigzag high-low indicator. Hey, Ricebird, thank you. I don't believe, I didn't see any survey in the chat window, but if you do see a survey, please take time to fill that out. Everybody, go have a great Friday. Enjoy the rest of the webcast that we have through the rest of the day, and then dive into your weekend. I will look for you in a future webcast. I'll also look for you on social media, on X and LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.